Welcome to Big Boy Crypto, home of the BitSquad, the largest and greatest crypto community in all of the interwebs. It's around the blockchain. We come to you Monday through Friday, 5:01 p.m. Eastern Standard Time. No channel is working harder to keep you in the know when it comes to crypto. And today we're going to be talking about your favorite subject with, I know I actually say this, but today it actually is a star-studded lineup. And I know I've lost all credibility, but today I actually do mean it. Just look at the panel we have already. We're going to go ahead and start on the top right. She was just displaying her one-of-one NFT, talking about CryptoWendyO. Oh, look at that. Such beautiful, beautiful art. Then on the bottom right, don't squint, don't adjust your eyes. That's not mac and cheesy. That's Altcoin Daily in the yellow beanie today. Then on the bottom left, we had to convince him to keep his shirt on, and I'm actually not joking. It is Your Biz. He was trying to trap you guys. And then on the top left, just leaving a fantastic meeting, Ben Armstrong, holding it down. Really, really big moves happening at Hit Network. I can't get into the details, though. But today, we're going to be talking about the Fed minutes just released. Kind of some big things there. You're going to definitely want to pay attention to that. Then we have Voyager going bankrupt, and it's just shocking the traditional finance system right now. They're reeling at the moment. And possibly a spot ETF, but it's in Europe, and we're going to cover all those. But before we do, we said the markets are being rocked. Let's take a look at the market, see what's happening, and things are starting to go a little bit flat. I'm actually going to go ahead, refresh at the risk of a few seconds here. 20,373. Looks like it jumps 20 bucks right there, pushing 24, and then Ethereum at 11.6. Now, Wendy, we had the minutes get released. You know, they talked about some basis points. We'll break it down further shortly. Did the markets react to this? I mean, how do the markets take this news?
So I'm just going to cover crypto for the purposes of this show. And we're in a pretty decent uptrend considering the news with Voyager, considering Celsius, considering the SEC meeting, considering all of an inflation being so high, just considering everything, we're actually looking really good. And we're in this little cute uptrend. My only concern is being able to actually flip $21,500 here. So if we're able to, then I would look to 23 and then obviously 26, whatever. But we're actually looking pretty strong and decent. But if we do break below this trend line here, then that decency would be invalidated. So fingers crossed we can sustain and hold the line.
Now, for the past week, a lot of traders, myself included, have been looking at this $24,000, $25,000 level. Do you feel less likely that's going to happen now or more likely that's going to happen now versus, say, a week ago?
To be honest with you, I want to be very conservative with the market. And that's just because of all the news that's coming out, especially with all of these exchanges and the insolvencies and the drama and everything. So I want to be very conservative here, and I want to just take things day by day or week by week and look at various areas of support and resistance to see if we're actually able to break out of those or break down and then, go that way. But do whatever works for you guys.
Yeah, we have these giant macro events maybe happening once a year, twice a year, and it seems like it's happening once a week, once every 2 weeks for the past 2 months. So it's been quite the ride with these larger events. But yeah, the markets did hesitate a tad. They looked with the minutes, and the central bank says they still are sticking in line with this 50 basis points to 75 basis points to try to keep inflation in line. I think largely the markets were kind of expecting that type of news. A lot of people were fearing 100 basis points or 1 full percent, or maybe the more optimistic people looking for the 25 basis points. Doesn't look like we're gonna witness anything like that. Now, Ben, we were talking about all the numbers to expect this month. Next week we have the CPI numbers. A lot of people are floating some scary numbers, some multi-decade high numbers. If we hit the 9 level, or heaven forbid the double-digit level with inflation, what are the odds that they go above 75 basis points for the next point raise?
I don't think they're going to go above 75 no matter what happens. I think 75 is probably the cap for what they're willing to do. The question is, how long will they continue to raise them for? How long will it be before the quantitative easing comes back from the quantitative tightening that we're experiencing right now? And I think that's the big question. If they raise it 75 bips in July, I mean, we're at the number they wanted to achieve. And that could actually be very scary, because if we are at the number they were estimating between 2% and 3% for the overall pullback or the overall rate hikes, and it's not making a dent, that's really scary. We could end up with this thing going 3%, 4%, 5%. over the next, year or so. We've got to see that number for the CPI come backwards, and we have not seen it drop, and that's very significant. Considering, I want you guys to think about this: was the first rate hike was in January, I believe, and we are now in July. Excuse me, we are now in July, it's the 7th month of the year, and we're not seeing a dent in the CPI. So that's definitely something very curious to watch. I want to say I'm shocked, but I'm also not shocked. I definitely thought we would get a large drop after these Fed minutes came out, but I think there was no surprises. That's what this boiled down to. The last several meetings, there's been more surprises. It's not really a surprise. It would kind of be like saying that, like, oh, surprise, inflation is not transitory. Like, these are things that we all knew. But the surprise, I guess, is that the policymakers are really panicked right now. That's what came out of those minutes, is that they are really considering more drastic measures because nothing they're doing is having an effect right now. So I'll give you a number that's very interesting to think about. Okay. In March, the projection for our GDP, for our gross domestic product, was 2.8%. That's, you want over 3% growth, you want 3% growth, whatever. That's a good number. 2.8%, lower than 3%, but still okay. Now, 4 months later, for this year, it's been projected now to be 1.7%. These are atrocious overall economy numbers, and that is a very scary. I think we're really kind of a juxtaposition of, they're throwing everything they can at it, and it doesn't seem to be working. Well, here's an idea: fire the people. How about that? How about fire Jerome Powell? How about fire Janet Yellen? How about get people in there that actually know what they're doing? And then maybe this can get fixed. Of course, you're led by a figurehead puppet at the top right now who doesn't know what he's doing either. So very concerning what's going on in our overall economy. And, we have not seen the last effects. The hopium that I'll provide people with, because you got to provide the people with hopium, is that, if we do see some kind of reversal of the CPI over the next 2 months, we could be looking at the quantitative easing coming back. If you find that comforting, you'll find that comforting if you're in Bitcoin. Quantitative easing coming back, before the end of the year.
All right. Well, Ben, you're throwing out some pretty good predictions there, and kind of alluding how bad the Fed is at predicting. Now, Altcoin Daily, they said, oh, this is what we figure this number is going to be. This is what we think this. They seemingly, the last 6 months, way off the mark. Well, in 2023, they expect to be in a position to be able to cut rates. Do you think in 2023 we will be in that position, or is this just going to be another mark that they just completely missed?
Yes, 2023 be in the position where they can start cutting interest rates. Good question. I know the bear market is hitting us all hard. I know DZ's carrying heavy Cardano NFT bags, which explains the reason his arm broke.
Yeah, it's tough. It's tough out here.
Yeah, but to answer your question, DZ, I think it's important we just zoom out a little bit and remember, why Bitcoin went up in 2020 and 2021 to realize why it's going down in 2022. And it was because, as we all know, the money printing, the inflation, and then when the Fed started to tighten, totally pivoting, changing things up, and trying to become more responsible with their monetary policy, that made Bitcoin and actually all investable assets go down. And it's also important to remember that all markets are going down at the moment. And really the people who came into Bitcoin over the last few years, unlike Bitcoin's first 10 years, Bitcoin's up until 2017, it was really, a lot of the major Bitcoin bull runs were primarily due to retail. And then in the last few years, we've seen tons of hedge funds, quant funds, institutions, these big money who don't think of Bitcoin as a hedge, who don't think of Bitcoin as what a lot of us think of Bitcoin. They think of it purely as a risk asset. And so when it becomes risk off, they just adjust their portfolio. And to them, it's nothing. They go from 6% to 3%, whatever it is. So 2023, if they cut rates back, I think that's definitely possible in that time frame. My worst case scenario, my absolute worst case scenario is that Bitcoin has a major bull run by 2025. That's my worst case scenario, because right in the middle of 2024 is the Bitcoin halving. Traditionally, a year after, Bitcoin has its bull run because if demand stays the same, supply flow is cut in half. But besides that, also in 2024 is the U.S. presidential election. And I think the powers that be are going to want the the people to think that, things are going pretty well. So that's my worst case scenario. It could certainly happen by end of 2023 where they, pivot.
Yeah, you definitely don't want your electorate to be crying at the gas pump, crying at the grocery store, just feeling the pinch when they see that light bill come in the mail. Now, mind your biz, let's kind of play out that worst case scenario. Let's assume the Fed does completely miss the target. We are in a tailspin economic wise. What are some, metrics or any kind of telltale signs that you're currently looking out for? Is there any kind of macro indicators for the economy that excites you? Whether it's hash power, the real estate market, the price of crude oil? What's on Mind Your Business radar here?
Well, I appreciate you asking, and I appreciate having me back on the channel. It's always a pleasure to be here on Around the Blockchain with the BitSquad and saying hello to those who are serious about leveling up during bear markets. An indicator that I'm kind of paying attention to is real estate. I mean, we saw this back in 2008, 2009. For those of us who were, working, those of us who owned homes, those of us who were trying to get out of toxic assets or get out of anything that was going to pull us underwater. We were fortunate enough, my wife and I, to sell a home in 2007. She had really great insight there. And so we missed the worst of it in 2008, but we did see something of a wave in the most populated markets then. So just from personal experience and just for personal taste, that's what I'm looking at this time around. It's served us pretty well. That time when we saw the economy take a downturn. So is that alpha? No. Am I trying to but it's also not a big secret either, right? So we do know that there's pretty strong correlation between real estate and some of these other asset classes. So that's what I'm looking at this time around as well, because when we do see the worst of it, and I don't think that we've seen the worst of it, I want me and my family to escape with our shirts on. So we'll be paying attention to real estate because that served us well last time that we saw the economy take a big old dump. And then also, as far as there being a really serious look at prepper materials, I mean, you guys probably get tired of hearing me say it, but I personally think some of the most important precious metals to be invested in right now are lead and brass, and I'm going to stand by that. Now, I saw that specifically during the lockdowns, that the cost of lead and brass, when it's formed by custom craftsmen into a usable state, it went up by almost 500%. That's since corrected itself, and there's now a surplus that's into that market. So I don't think that that's going to be the strongest indicator, but I am going to say I'll be storing up certain things that I think will maintain their value, but I'll be paying attention to real estate as the canary in the coal mine for possibly a return to more sensible prices. CPI, yeah, I mean, I think this is an important metric that others are more well suited to pay attention to. I just pay attention to the price at the pump and to the price at the register. And I'm seeing that it's just way out of check right now. It's way beyond the single digit numbers that we've been told for some time. It's actually beyond the double digit numbers that most of us have extrapolated and guessed. But real estate is what I want to really pay attention to for when we see things calm down. That's my indicator.
All right. I like that. Stock up on the lead, on the brass. But what about canned meat? Should I get chicken breast or Spam? What does Mind Your Biz say?
I mean, Spam Masuba is pretty darn tasty. That's a delicacy in some parts.
All right. Spiced ham it is. All right. Let's move on. Talk a little Voyager. I know Ben loves Spam. I saw him just, nodding emphatically there. I actually pulled up their chart real quick, and it is not pretty. It is down and to the right. I tried to move it a little bit, but, I mean, if I could play with that. You can just see on the top end, that's close to $7, $8, $9, and now we're all the way down to, below 30 cents there. And Toronto Stock Exchange just announced they are currently suspending the crypto brokerage from their platform, and they're considering delisting the firm entirely. Of course, this comes on the same day that they have filed Chapter 11 bankruptcy protection. So not looking good for Voyager, obviously. Now, there is a little bit of a difference between Chapter 7, Chapter 11. Just a quick breakdown. Chapter 11 does not liquidate the assets, just restructures the debt. So just a little caveat there. So it's going to be a little bit of a question mark to see who gets their money. Now, Ben, with the Chapter 11, they get to restructure. There's going to be a lot of, I don't want to say a favoritism, perhaps. There's who put in the money first, who put in the most money, who put in the money last. There's going to be a lot of factors here. For the average Joe, for the average retail client, how likely is it that they get their money back?
Not at all. Not at all. Your money's gone.
You didn't sugarcoat it. You didn't. No soft landing, like the economy.
I'm sorry. Like, this is the deal. Like, this is what it is. And I think it's better for you to take this medicine now and understand this is the situation. And then if by some miracle you do get money at some point, that's a bonus. Like, that's added on. Like, lucky you, good for you. You should not be operating under the presupposition that you are going to receive your money. If you're operating in that presupposition, you are going to be sadly mistaken. The way that these work is your unsecured creditors or your secured creditors get all the money first. So that's going to be the bills, the loans, the companies they worked with, anybody who had an actual contract with them, they're going to get all the money first. By the time that money gets dispersed, there's not a lot left. And even if there is some left, you'll have to go through a class action lawsuit probably to get it. And then you're still going to get pennies on the dollar. I mean, like I say, one time I got a class action lawsuit. I got a check for 39 cents. You don't get money in these class action lawsuits. The lawyers make the money, and you punish the company. You punish the people for what they did. Having to go through that is very, rigorous. But I'm really sorry. Like, I don't want to be the bearer of bad news here, but if you had your money on Voyager, you need to now consider it gone. And I think when you could go through the 5 steps of grieving, you go through the admission of the problem, you go through the bargaining with God, you go through the anger, the denial. The first one's denial. The acceptance is actually the last step. I said those backwards. But you can really look at those, and you're probably going to have to go through a process if you had a lot of money on there. It's very sad. We've told people to pull their money off these exchanges. When you start hearing rumors of a company, just like KuCoin, pull your money off KuCoin. Pull your money off KuCoin. I don't care if they're solvent. You need to be operating in a position to where they're not. Coinbase, you can probably trust. Binance, you can probably trust. FTX, you can probably trust. Outside of that, I would not put any money on exchange. And I would put my money off those as well. You need to learn how to custody. You need to become a big boy and big girl and learn to be responsible for your own money. Because unfortunately, we've told people over and over on this channel, the best way to do things is to self-custody. I know everybody here on this panel would agree with that. So don't become the next victim. Like when we got the news about Celsius, people would have been smart, pulled their money off Voyager right then, but they didn't. They waited, and now they got. Because remember, Voyager said they were fine. Everybody said they were fine last week. So learn that lesson. KuCoin says they're solvent, but they got the dreaded vote of confidence from their CEO. I would pull all my money off KuCoin. Of course, if you're an active trader, it's a little bit different. Most people watching the channel are not active traders. But my thoughts and prayers go out to the people that lost the money on this. If you ever get money back in it, from this, then you should consider yourself lucky. You should be operating as if you're not going to receive it.
And I'm pretty open about talking about KuCoin. I have used KuCoin in the past. I have pulled off almost all my assets off KuCoin. The only thing left on there is my Wax, because Wax wallet, I got to dust off an old laptop, and it's just a whole issue. And it's Wax. Sorry, Stash. I know you're out there listening somewhere. All right, but you kind of talked about these exchanges, and it looks like they did have a little bit of a claim against Three Arrows. They're saying Three Arrows owes them $650 million, kind of leading to their meltdown here. They do have some assets on hand. They're listing their assets. Voyager listing their assets at $1.3 billion. So, maybe they can crawl out of this. I agree with Ben. Maybe probably best to just write it off as a loss. But, Wendy, we see these lending platforms just failing left and right. And then it's this domino effect. They have, exposure to this one, who has exposure to this one. You just see this big circle of everyone just kind of taken from the left pocket and putting in the right. Will lending platforms be able to recover from this, or is all hope lost unless you're one of those, 3 or 4 names that Ben just listed off there?
One of the things I will say is Ben and I actually talked about this on his channel, is that all of the passive income that we were getting on the lending and the staking, whatever, I don't want to say staking, but all of this passive income, we knew it was going to go away. We just didn't know it was going to go away in this fashion, which was absolutely scary. I feel like Celsius really caught me off guard. And then I knew after that. So we live streamed it was the weekend of May 27th on my channel. I was gone on vacation. I live streamed. I was like, you need to get all your money off exchanges. I don't know what, there was something that told me that wasn't sitting right with me. So a lot of my audience congratulations to you. But I think that the CeFi will come back because FTX is still offering the 8% passive income on their platform, on their BlockFi app, and some of these other ones are as well. I know that Gemini uses Genesis, which is a part of digital trading group, but it's going to be completely restructured. It's going to be restructured. It's not going to be the same. The exchanges that are going to operate, that are still going to operate, they are going to be exactly like banks, and it's going to be a lot more strict. And this whole thing is really terrible because it's going to make it awful for people that are not institutional investors or that are not accredited investors, and that's probably one of the biggest creates the biggest wealth gap in the world, is that if you don't have that little degree, or you weren't gifted money, or you don't come from a high earning income area, you're not qualified to invest. And I feel like especially Americans, we are dumbed down so much by our public school system and all other aspects around us that we do not use critical thinking. We don't read terms of services. We don't pay attention to how a lot of these things operate. So it's unfortunate. I had money on Voyager. I had a little bit of money on Celsius, but at the same time, I understood the risk because I'm actively trading this stuff. So it's hard for me to keep it off exchange. But if you're watching this and you are on any of the exchanges who haven't been impacted yet, I don't care who it is, consider getting your stuff off exchanges. And when I say get your stuff off exchanges, don't just leave it in MetaMask. Use a Ledger, use a Trezor. If you're going to use something like MetaMask, make sure you're using a phone that you're keeping offline. Keep your keys offline, and really consider utilizing paper or desktop wallets.
Yeah, Celsius also caught me off guard. I thought it was going to be, when they went from 20% to 19 to 18 point something, I thought it was just going to be a slow trickle to 3%. Right. That would be the death of the platform. But yeah, I was not
Another thing that I want to chime in
100%.
about, DZ. I have to say this. I want to know, because we know that FTX, that Alameda, that Sam owns approximately 11% of Voyager. I want to know, because he gave a loan, and I believe it was $480 million or $400 million. It was around that to kind of offset what was owed by Three Arrows Capital. The math still isn't adding up. It's not making sense to me. If they have this massive loan by FTX or Alameda, that entity, and they have up until 2024 to pay that off with 5% interest, why is this happening? So there's something else that is going on in the background that we don't know about. At least with Celsius, we can see all of the debt on chain for the most part. It's just where the heck is Alex getting that money? So there's a lot of unanswered questions that I have. I'm not trusting any exchange at this point. None of them. I don't care who it is.
It feels like I said earlier on the show on our morning live stream here, it feels like Voyager just freaking tucked tail and ran. Like it sounds like they don't give a rip about their customers. They don't give a rip about their users. All of the CEO cares about is insulating and protecting himself. And it's a very cowardly move to do this quickly when Celsius has a much bigger debt, I'm sure. And at this point, they're still at least, you got to give them credit for at least trying to fight to keep this thing alive and not, filing for bankruptcy yet. And the fact that they did this so quick, like they're just bastards. I don't know what to say about it. Let's go to jail.
Let's talk about
also
Altcoin Daily.
Too. Okay. Sorry, but really quickly, but again, Ben, like the loan difference between what Alameda gave Voyager was only off by like $100 million. Nothing that was too terribly crazy. So something else is telling me that, again, there's something else in the background. And then Sam came out today and was talking about that he thinks that this is the bottom and this is going to be the end of it. I don't think it's going to be the end of it. I'm not sure
I don't either.
How it's going. Nope. I don't like. How is this going to be the end of it? How?
Yeah, I'm waiting for Justin's son to buy ETH again, where I'll call the bottom. Now, let's talking about that Altcoin Daily. Voyager, it was a $485 million loan from Alameda. Alameda, those who don't know, is SBF's little brainchild there. Do you see Alameda playing a role in this? Is this just a similar play, with just maybe a long-term play to get their customer base under FTX? What role do you see Alameda playing here, moving forward over the next year or two?
Yeah, Sam Bankman-Fried of Alameda has been going ham, just providing financial support and support. Spam, ham.
Okay.
Cash is the main thing, really, to all these companies that are going under. But Sam Bankman-Fried, his motivation is just to keep the party going. Obviously he wants to do what's best for all the crypto things that he's invested in and that he runs, but also just generally. And not that the cryptocurrency industry is going away, but just to make it so that this bear market of sorts, doesn't burn out tons of people. Obviously, you're going to get, obviously what's happening right now is awful. And, what's happening with Voyager or Celsius or any of these is bad for two reasons. Obviously, there's the big reason, people who are actually on the platform who can't withdraw or holding the token that's, decreased in value. But also just, the sell pressure of these traditional financial entities like a Celsius, like a Voyager, who have to, if they're insolvent or need cash, they have to sell their liquid assets like Bitcoin and Ethereum. That's adding to the down pressure of the market as well. So at this point in time, we just have to wait it out.
All right. And speaking of waiting out, this is going to be a wait and see approach. Now, Mind Your Biz, with this approach, say Alameda does, play some sort of helping hand here. What do you think of SBF's motivation here? Is this like a altruistic for his bags and everybody's bags, or is this like a cutthroat late 80s Bill Gates play where, there's a lot of shark-esque behavior?
Well, before the late 80s, there was the early 80s with the Japanese takeover of the American economy. You remember that the old Back to the Future movie, the second one, where Marty goes into the future and like his boss is talking to him over a video chat like this from Japan. Like we all thought for sure that Asia was going to take over. And a lot of the oldest business books in the world have come out of those cultures. Just a reading suggestion for the audience. If you haven't read The Art of War by Sun Tzu, good stuff. Every Chinese business person reads it. If you haven't read The Book of Five Rings by Miyamoto Musashi, every Japanese business person reads it. And guess what? Guys like SBF, they are smart AF, right? Like we can just completely redo his name, right? So SAF, smart AF. They read this kind of stuff. They know how to take advantage of opportunities like this. They know when their political and when their business opponents are on the ground that they have to raise their sword. They've got to flourish. They've got to run in, or they actually have to finish off those who would be opponents to them. Make no mistakes. SBF may look altruistic right now, and this could be good for end users because they need this service, right? This is how they build in that future customer service, is to help them in their time of need right now. But make no mistakes, he is out for blood. And blood is what he's seeing, so blood is what he's getting. And so, like, kudos to him for doing the right thing by stakeholders of FTX and by stakeholders of everybody else that Alameda Research. But no, as far as us in retail participation, like from the cheap seats, it just looks like there could be some altruism here. No, that's just not how the game is played at all. That's not what any of these people are trained to do. They're trained to look for the most advantageous buying opportunity they can find and then go make that penny squeal. Make everybody who's a competitor to them bleed on every deal on those margins. Make it razor sharp for them and big, thick, fat margins for us, whoever they and us are. So no, I see history being made right now in the crypto, in crypto. Like we're going to talk about this as one of those like Mount Gox level events 5 years from now. We're going to remember what SBF did. This is going to be one of those things that we base a lot of future crypto companies off of is these kinds of power moves. So,
Wendy, I see you want to add some. I mean, I see his long Altcoin Daily like hair and his loose t-shirt, and I just think this guy's nice. But I mean, Wendy, what are your thoughts on this?
Well, it came out today, which was very interesting. I don't remember who published it, but I want to say that Sam said that he has about $2 billion he's willing to give out to the crypto community to save. But if he has this money, why are we not focusing on helping Voyager? Why, because I know that they did help Voyager, but what happened? I'm really trying to understand why, if you have all this money and you want to help the industry, well, because we know he's not we know it is all about business at the end of the day, but he did go on a tweet storm. So if you guys look through his mentions, you'll see some interesting things being said. And I, from a business perspective, I respect it, but from an ethical perspective, I'm just looking at it. I'm just trying to figure out because there's something else that's happening behind the scenes that we do not know about. So I just want to leave that with you guys.
SBF
follow the money.
I thought SBF was more of a Marty McFly, but I guess he was Biff all along. He was just sneaking by. All right, let's talk a little ETF. We're already halfway through, so we'll halfway through the hour. We'll make this one quick. But Europe might get its first spot Bitcoin ETF. This is from the Euronext platform. It is Europe's largest stock exchange, and they plan to release this July with a 1.5% management fee for them to basically custody your assets. For reference, this stock exchange is roughly about twice the London Stock Exchange, still smaller than NASDAQ, maybe roughly 25% the size of NASDAQ. So by no means a small institution, very large stock exchange for Europe. But Wendy, one of the signs of a bear market is good news doesn't move the meter at all. Will this passing do anything to Bitcoin's price, given the current market conditions?
Is this ETF going to be in the United States?
Europe, but the largest European stock exchange.
It'll maybe
countries.
give like a little tiny, like little baby bump, maybe 1%, maybe a $500 price pump. But realistically, unless it's in the United States, unless it's one of those ETFs that we have been, that not me, but the ivory towers in crypto, especially the maxis, have been on their hands and knees begging for, it's not going to do anything to the market. Because let's face it, everybody has their eyes on the US and when this spot ETF is going to be released and whatnot. So until something like that happens, I think we will see a change in the market. And I also think we will see a big change in the market if and when the XRP Ripple against SEC case gets settled, because everybody is also waiting for that. So United States of America has some things that they need to sort out. And I do think that they are, I feel like a lot of this is very strategically planned also.
All right. On that note, I'm going to switch gears here. Ben, what would have, I think I know the answer, but what do you think is going to have a bigger price impact on Bitcoin? Ripple lawsuit or spot Bitcoin ETF passing in Europe?
Spot ETF in Europe does nothing. Like, that doesn't do anything. Like, and we can take the example of looking at some other kind of like altcoin centered, funds that have been launched in Europe on their different stock exchanges, the Switzerland Stock Exchange. It does nothing. It does literally nothing. The volume is here in the United States. $80 trillion, I believe, is the estimate. So somewhere around there, $60 to $80 trillion for the overall market cap of all of our stocks in the United States. Somebody can cross-check that, but I believe that's the number. It's not going to do anything. Obviously, the Ripple lawsuit ending is going to have a big effect on the price of XRP, but is it going to have that much of an effect on the price of Bitcoin? I believe what we're going to see with both XRP and Bitcoin when it happens is a pump. XRP will pump considerably higher, obviously. But what we're going to then see is, as long as we're still in the thick of a bear market, it's going to come back down, and people are going to have time to accumulate. I think if this gets pushed off until, I really can't imagine a scenario where XRP ending will re-kick a bull run. Where the case ending will re-kick a bull run. I don't think we're going to see that. So I think ultimately neither are going to have a big effect on the price of Bitcoin. But I think that just is what it is. What I would say, though, about a possible ETF for Bitcoin in Europe is that could potentially put pressure on our regulatory bodies to do something to make a move. I mean, because you got to look at like, okay, well, if the SEC is sitting there and they're saying, well, Europe approved it, they're pretty strict on stuff. Maybe we should approve it. We're going to, get behind stuff like that. So I think that's really where the value in this conversation comes on, is the pressure on the regulatory bodies.
All right, well, let's talk regulation, Seth. And people in the super chats, they definitely think you're reptilian for some reason. They think even that is why you recommended spam. Hey, he didn't say no, folks. All right, but what are the odds that this Europe approval will impact U.S. policy? Do you think there's any possibilities there?
Well, there's definitely a long, rich precedent of European policy making its way over in the United States, but very, very filtered and very heavily informed by all of our states. We still believe in this thing called states' rights here for various different markets and for various different rulings. And I, for one, am very happy about that. And when it comes to financial markets too, doing business, especially within cryptocurrency and especially within the blockchain industry, is vastly different from New York to LA and from, say, the northern states, your Montanas, it's whatnot, all the way down to Georgia. It's very, very different depending on where you are in the United States. And I would prefer it stay that way for as long as humanly possible. Let's try to keep the federal government, only putting on the training wheels as necessary. But yeah, GDPR is one fine example. What did that turn into, though? That was a privacy-oriented piece of legislation in Europe that wound up coming to the United States, mostly in places like California, and not really turning into federal law here by way of like financial precedent and financial offerings like this. I don't know that it necessarily follows that we're going to see new ETFs rolled out in the United States. That hasn't necessarily been the case in the past, that there's been an ETF proposed or adopted in Europe, and then, automatically the following quarter, there's a corresponding ETF that's offered here in the US. Beyond that, you do have, again, because of those different regional specific and state specific boards of equalization. I mean, good grief. There's a reason I don't live in California anymore. And that's because the California Board of Equalization scares me more than the IRS. So there's all kinds of reasons that this might not necessarily follow into an ETF here in the United States, in my opinion. And frankly, United States ETFs, as they've been proposed in years past, it's kind of more of a sell the rumor or buy the rumor, sell the news type event, where the actual passing of an ETF or not passing, failure to pass an ETF here doesn't seem to bother Bitcoin all that much. Bitcoin turns back into honey badger when this sort of thing is proposed here, because we just kind of say, you know what? We don't need y'all. We can just hold it ourselves on our own wallets, and we can go use our own decentralized exchanges and our own face-to-face on ramps and off ramps. So yeah, I don't think this is necessarily going to be a nothing burger, but I don't think it's going to do what people think it's going to do.
All right, well, Altcoin Daily, I want to stay on this state thing. You know, he's attacking California there. I saw you just shaking your head, and I know you live in California. Every day is a gamble, you know, at least when you walk by Skid Row, it certainly is. But given, you know, Europe, say they do pass some onerous legislation, and we've heard whispers of legislation with Bitcoin and crypto exchanges, you're going to have to KYC everybody you send crypto to. You got to get their home address, their name, and everything else. If California were to pass some regulations for California residents only related to crypto, would you consider moving? What do you have any thoughts of that or fears about that?
Yeah, I can't get on a cryptocurrency stream without somebody making fun of California, the state I live in. Now, if California were to pass some, I mean, California is already very regulated of sorts. Obviously, we pay super high taxes. Now, if California were to go even further and something just outrageous for cryptocurrency, I mean, yeah, I would, at this point, I'm not planning to move because I have family here and friends. But at that point, I mean, yeah, there is a limit. I would move. Hopefully, California doesn't do that. I think generally speaking, with this Europe spot ETF, it is overall a good thing, and it does kind of put the American regulators' feet to the fire. I mean, it's not going to move the price at all, but you know, a spot Bitcoin ETF, they have to custody that Bitcoin. If enough spot Bitcoin ETFs happen, obviously that's, you know, reaching into the limited fixed supply of Bitcoin. Not to mention the people who are custodying that Europe spot Bitcoin ETF is Fidelity, the largest investment financial company in North America. Fidelity has tried to get a spot Bitcoin ETF going in America. It will happen eventually. And even more than that, you know, the reason spot ETFs for Bitcoin are so good, particularly in America, is because those are institutions with a lot of money. They'd be buying a lot of Bitcoin, getting a lot of exposure. And, you know, Europe is tight with the global financial regulators, just like Canada is tight with the global financial regulators, and Australia. Both Canada and Australia have Bitcoin spot ETFs and Ethereum spot ETFs. So it is only a matter of time until it happens in America. And when it happens in America, it's not going to be like, you know, just parabolic growth overnight. But overall, it is going to be a huge precedent set and a huge step forward, and it will be ultimately very good for the price.
All right, good points. I agree with you. I think the main value proposition is the custody and into the game theory of the finite supply. There's only going to be 20 million unless that Satoshi wallet gets unlocked. But that is all we have time for, and it looks like it's going to make a reptile joke, but no, it is Mind Your Biz. He ended up winning. You know, he's not even on Earth, folks. So, you know, that tells you everything you need to know right there. That's why it's a little blurry. But all right, Seth, feel free. Leave us with some parting thoughts, please.
Well, first off, I want to say thanks, DZ. And after the show, please show me on the plush reptile where the bad man touched you. But guys, please do subscribe to Mind Your Biz. It does help my channel a lot. And please do subscribe to the other panelists. They're amazing, as you know. I'm so humbled to be back here on the show with such great thinkers. Every time they invite me back, I'm just so grateful. So thanks for having me with you during this time.
Yeah, it was Godzilla. All right, that is all we got time for. And once again, make sure you're subbed to all of these channels. Wendy, Altcoin Daily, Mind Your Biz, great channels, all putting out fantastic content. And if you're not subbed to this channel, what are you doing? Go ahead and hit that button, hit that like button. And until next time, BitSquad, DZ out. Check out that art.